Cool beans, cool beans, cool beans. Welcome, 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 everybody. Welcome to the midweek technical and fundamental analysis. We're about to go ahead and jump into it. Before I jump into it, let me give the disclaimer as usual. This is not financial advice. Anything that we share during this analysis is for educational purposes only. I repeat, this is not financial advice. Anything that we share during these analyses are for educational purposes only. Cool beans, cool beans. So, looking back at the week, pre-week analysis, beginning of the week analysis, I told you guys I'm on the wrong chart. Let me go to the dollar. All right. I told you guys that I was bearish opening up the week for the dollar, right? I wanted to see us go lower. And I
I don't
wanted,
see none.
oh, one second. I ain't even sharing my screen. I'm just talking away. Thank you, Roche. Cool beans. All right. Now, looking at the dollar, told you guys that I was expecting the dollar to open up bearish for the week. I told you guys in order for the buyers to switch to bullish, I would need to see price run above November the 24th PD arrays and buy side liquidity. Not only run above those levels, but break above them aggressively and close above them. We seen that yesterday, right? That was all. That was it. That was all I needed to see for my buyers to switch to bullish. I told you if that was to occur, then what was the next target? What was the next point of interest? The weekly buy side liquidity. I told you guys if we rent those levels aggressively, closed above those levels, then I would expect for price to run the weekly buy side liquidity. The next point of reference right here. You see, we got that rent today. And then I said, once we run that, I would like to see how price reacts to that level. Now, what I'm expecting for tomorrow, because Thursday typically serves as a what? A reversal day, right? So what I am expecting for tomorrow, I do expect price to pull back down and retest the levels that we just broke through yesterday. That's what I'm expecting. If we find support there, then I expect for price to keep swinging higher and come back and retest this in inversion um daily volume liquidity right here. This daily volume liquidity here. Um, Let me see some. This um I'm trying to see what my level look like that. And I'm sorry, that's not volume liquidity. That's just fat value gap, right? I don't know why I've been calling that a daily volume liquidity. But volume imbalance, I'm sorry. But this fair value gap that we see price ran through on November the 14th, right? So if we find support in these in the buy side liquidity, then I expect us to run higher. Prices showing bullish, aggressive bullish, um bullishness to the upside, right? And so if we find support at these levels that we just ran through, firstly being the daily buy side liquidity, then I expect us to run up and retest this daily fair value gap. And if we break above it aggressively and close above it, then what's next? This imbalance that we see right here that was created on November the 14th, right? These weekly premium arrays would be the next point of interest. So That's why I always give my bias, but I always give a if this then that type of analysis because as you know, markets can flip on a dime. They do what they want to do, and a bias is just that a bias, but price can do what it wants to do, will do what it wants to do at any given second, any given moment of the day. And so that's why I always give a if then that analysis because if I would have just stuck with my bearish analysis for the dollar this week, then I would have just been fighting all of this along the way instead of allowing it to show me exactly what it was reaching for, right? And it showed us right here, right? Because yesterday on Monday, we respected those levels. We ran through all of the daily PD array levels, right? But we closed below it. So my bias couldn't flip to bullish then because we closed below the levels, right? So we could have still sold off from those levels. That's why I said I wanted to see us run aggressively above those levels and not only run above them, but close above them. And that shows that prices efficiently delivered through those levels. It's showing aggressive bullish action to the upside, and therefore I can make a decision based off of what this candle showed us, right? And it showed us that it wanted to reach for that upper level of buy side liquidity. Cool beans, cool beans. So I'm expecting a pullback for the dollar tomorrow, pulling us back down for a correction, back down to the levels we just ran through. And it could very well slice through those levels and just drop like a knife and push to the downside for the remainder of the week. That's yet to be determined. We have to wait for price to show us that. So moving forward to currencies, of course, you know, I was bearish for the dollar this week. So, of course, I was bullish for currencies. I told you guys that the only way my bias would flip to bearish for currencies is if what? Is if we ran Friday's sell side liquidity in this daily that value gap here, right? And broke below it aggressively and closed below it. We got that yesterday, right? That was all I needed to see. I told you guys if that was to occur, then my bias for Euro USD would be for price to run down and retest the weekly PD arrays levels within this imbalance that we see from November the 14th, right? Easy peasy. Right? Price shows you and tells you what it is that it wants to do. We just have to be aware of it and listen to it and follow the order flow. Same thing for pound. Same thing for pound. Bias flip to bearish once we seen the daily sell side and weekly sell side liquidity ran through aggressively and closed below. All right, we got that yesterday. And price in the market was bearish today for the pound. Of course, I told you guys that this was the next area of interest if we had that to occur, right? Those lows ran and closed below. That this fair value gap was the next area of interest, and possibly these weekly discount array levels, right? So let's see what the rest of Asian and London gives us tomorrow. Let's see if we come on down and retest these levels and start to reverse off of these levels. Same thing for NZD USD. We got that break and close below that daily sell side liquidity yesterday. Price mostly pulled back today for NZD USD, but as you can see, we still close below those levels. Excuse me. So I do expect price to pull down to retest um first fall down inside of this daily fair value gap, right? And see if we can run down to retest the weekly buy side liquidity. Did I not change my buy side? I'm sorry. Let me see my weekly level. Yeah, so I didn't change my sorry about that, guys. I didn't change my weekly PD arrays for NZD USD. Should be. Let me see something like that. Just let me go ahead and trigger and then change that. I was wondering why those weekly discount arrays was looking so far away. I was like, why are they so far away? All right, there we go. So look at that. Look, little mistake like that right there can cause you a good trade, right? We are currently sitting on top of the weekly PD arrays. Let me go back to the daily. Right? So that's why we're seeing that pullback off of that 62 weekly PD array. But Mr. Levels forgot to change the levels. So hey, that would have been an opportunity missed for me had I been trading currencies, but I don't trade currencies. So make sure you are adjusting your daily PD arrays on a daily basis. Make sure you're adjusting your weekly PD arrays on a weekly basis. Do better than Mr. Levels. Cool being so yeah. Um I expect price to pull on down into the 79%. And it's right inside of this daily fair value gap, which is beautiful. If price is going to find support here, you should start to see a smart money reversal off of this level. You know what that smart money reversal is. Smart money reversal is that low, high, lower low, higher high, right? Being that I'm on the daily, it won't let me, hold on, take that back. Go to the hour, right? So y'all see what this money reversal looks like. All right, low, high, lower low, higher high. That's a smart money reversal for the when the market is coming out of a downward trend, going into a bullish trend. Sorry. That is the smart money reversal pattern. A low, a high, a lower low, which Michael Huddleston refers to this as turtle soup, right? And then the only thing you're waiting is for price to come back down into the fair value gap created in this swing up to create the higher high, running this market structure right here. That's that shift in market structure there when that's broken, right? And there should be a fair value gap created. In there. And then you're just waiting for price to come back down into that fair value gap. And you take your trade off of that fair value gap for the continuation. And this would be your TP1, you know, depending on how far you think it's going to go, TP2, TP3, or whatnot. But that is the pattern that I'm looking for when I'm looking for a reversal in price, okay? Smart money reversal pattern, low, high, lower low, higher high. And it's the opposite for sell side. It's going to be a high, low, higher high, lower low. And you're waiting for the pullback after running that low. You're waiting for pullback into the fair value gap that was created in this leg down. So the pullback, and that's your entry inside of the fair value gap for price to run lower. Everybody got that? Cool beans? Cool beans. Um, moving on to futures. Uh, the bias for futures opening up this week was bullish, right? I wanted to see us continue to push up off of the daily PD arrays from Friday's price action, right? We respected those levels, but we see these wicks to the downside here, right? From Monday and Tuesday, price was pushing bearish real aggressively, right? But we still closed above the daily PD array levels Monday and Tuesday, right? So of course my bias still remained bullish up until today, because what did it take for my bias to flip to bearish? For this sell side liquidity to be ran through aggressively, and not only ran through but closed below. And we see we got that today. So for tomorrow is a reversal day though, so that's why I want to see what the market. We could see price go ahead and reach down into this weekly PD array throughout the rest of Asian tonight and going into London, and then somewhere around in London we see the low of Thursday created, right? And then going into New York we start to see the market pull back up off of that weekly PD array level, right? But we got to close below that daily buy side liquidity. So I do expect for ES to pull down at least to that first weekly PD array level, and then I'll start looking for smart money reversals. Then, if we break through that and close below it, if we break through it aggressively and close below it, then where's price telling you it want to go? To the lower level, to the next PD array level. And then you'll look for the same thing there. Start looking for smart money reversals, or you'll look for price to break below it aggressively and close below it. And then price is telling you that it wants to run sell side, the weekly sell side liquidity, and so forth and so forth, right? So that is what I'm expecting out of ES going forward. Now we see today price reach back up into Monday's premium price levels, right? These are the 62 and 79% levels of Monday's price range, right? Price pulled back up into there today with news, and then we aggressively sold off to the downside, right? So that's why I said make sure you're changing your daily PD array levels every day, because if you're not, you'll still have your levels on there from Friday, and you won't have these on your chart as a point of reference, right? So always make sure you're putting your daily PD arrays on there every day, changing those every day, because you're always on the current day, on the current trading day that you're trading, you're always referring back to the previous day's PD array level. And the same thing for the weekly PD array levels. For the current week that you're currently trading, you're always referring back to the previous. Oh, excuse me, guys. You're always referring back to the previous week's PD array levels. So for Monday, you're referring back to Thursday. For Tuesday, you're referring back to Monday, right? You see, Monday's PD array levels didn't get retested, right? So if price is not showing you enough bullishness to get up there, Tuesday is going to do one or two things Wednesday. It's either going to get up there Wednesday, or it's going to continue to push down like it was Monday. And that's why you need to have those point of references on your chart. Correct? Correct. So that's why I stand with ES. I expect us to pull down into the weekly PD array levels, and then I will see how price reacts to those levels. If we start getting smart money reversals, or if price breaks below them aggressively and close below them. Cool beans, cool beans, and the same thing for NQ, right? We broke and closed below buy side, sell side. The daily sell side and the weekly sell side liquidities, right? We broke below them today aggressively and closed below them. So therefore, I would like to see us come back down into this shaded area from this BISI that we see here, buy side imbalance, sell side inefficiency, right? It's coined by Michael Huddleston. And then we'll see how price react to that level when we get there, right? If we break back above the buy side, the daily and weekly sell side liquidities, then I'll start looking for price to reach higher, right? So it's all about what price is doing and what price is showing you and telling you it wants to do. So with that being said, that will conclude the midweek technical analysis. At this time, I'll pass it over to Carmen so she can give us the sauce on the fundamentals. It's all yours, Carmen.
Hi, everybody. You were ready for me, right, Mr. Levels? I just ran over to the computer.
Yep, it's all yours.
Okay, cool. Um, so man, let's see. Um, it's a couple of things. Last class I didn't really talk a whole lot about anything neuroscience related. Because I don't want to wear that out. But Um, one thing that I do want to reiterate is the fact that I want you guys to be very knowledgeable in whatever it is that you want to trade. And I also want you to keep an open mind to other things. Meaning, if you have strictly been a Forex currency trader, you never ventured into anything else, I want you to take a look at other things. And the reason why I'm saying this is because we've already had the conversation about how financial markets are going to be shaken up in the first and the beginning of the second quarter of next year. And while, yes, there's a lot of hype, a lot of talk about cryptocurrencies as well as interest rates. And the last class, we talked about those correlations and how things change. Um, there's other market effects that are happening as well. So um, when you sit back and you look at the news and you hear cryptocurrency, not from the media's perspective, but what they're telling you is actually happening from a policy standpoint. Um, a lot of the clearinghouses, a lot of banking institutions are really going to start changing how they do business in 2024. 2024 is going to be the year where if you ever expected a shift or a transition in financial markets, it will definitely be then. And if not, the first quarter or second quarter of 2024, it's shaping up for the next cycle, which is technically supposed to start at the end of 2024, the beginning of 2025, which that makes sense because it'll be an even year. It's a presidential election year. a lot of what would be considered either old policies running out, new policies coming in, party ideals, sorry, will start to come out and take form. It's really easy at the end of a presidential election year, no matter who the party is, to make excuses, and then to also use that as a time for major shift, because you're either going to claim the other party didn't do a good enough of a job, so now you're trying to make things better, or you're trying to make those who voted for you happy, and you're trying to do some short-term things to appease them, and then they fade away in 18 months or so, which typically is kind of what happens. Especially here in the US, you don't have leadership hanging around long enough to sometimes see their policies even come into fruition. Like it's not until I think Trump was in his second term that some of the ideals and some of the policies, rules, regulations that Obama had written in, or signed off on actually became active, where you really started to see the effect of them. Same thing now, which is why you get a lot of the shift and blame. But anyway, if you start to look at who is currently in office, who um, is like leading in their primary areas where there's a lot of support for cryptocurrencies and a lot of support for the digitization of the financial markets, you'll see that there's a lot of traction gaining there. However, on the opposite side of that are financial institutions who currently, I'll just have to post the article at some point, but Jamie Dimon, for instance, was like very, you know, anti crypto earlier today. And I feel like you get these things. So if you go back, and I really want you guys to study this, because when you hear financial leaders, CEOs, um, whatever their title may be, when you hear these people speak, you need to know what the sentiment of the market is, but you also need to know what the trend has been in the past. It's not like crypto is like completely new, as opposed, like, if you compare it to other financial instruments, yes, it's new. However, it's been around long enough to have established a pattern. So you can go back and look at patterns of what happened before Bitcoin halving happened. What happened when the president spoke out, when the World Economic Forum spoke out, when the World Bank spoke out. Like, you can start to see how the market moves. Like, when there's major news of crypto in the market, initially there's a dip. Crypto hates to be talked about in the marketplace. And um obviously right now, with the market effects and things that are going on with the economy, it's not one of those things that's going to be seen immediately. But I do feel like going into the rest of the year, I mean, there's not much left, but the rest of the year, the beginning of next year, you'll start to hear this hate for crypto. And then, you'll have April, March, I mean, sorry, April, May come along. And then, the changes in the financial system are all happening within like this 90-day like span of time. People will blame the shift in gold on that, the shift in digital currencies on that, the shift in the value of the dollar on that. However, one thing I can say about things that happen in the United States are that if you have a major event, it doesn't have to be anything big necessarily. It could be something really small. Policymakers will find any reason to rally around that one little thing and make a big deal about it and implement laws and policies around it that will put more restrictions and put more tightening cuffs, if you want to say that, on the average consumer. So with crypto, you know, and not just crypto, I should say investing in general, but I'm highlighting crypto because of just the platforms that it gets traded on. With investing, period, the um the bar or the level for entry that is going to be set is going to be pretty high. Right now, anybody can get in. Right now, it's cool. You can open up TD Ameritrade, aka Charles Schwab now account, E-Trade, Robinhood, Cash App even, and invest. But the money that helped and went into funding these companies and being able to help them have this cash pile on the back end to help give margins and to help propel some of these accounts, that's not there anymore. And if you look and just take a look at financial news, financial institutions are starting to merge on the back end. And, you can still go through and get individual products. I mentioned TD Ameritrade and Charles Schwab. Like you can still get a TD Ameritrade account, but eventually that TD Ameritrade account is not going to be TD Ameritrade. If you had one before, if you try to log in now, it's going to make you use or create a Charles account. And I mean, if you ever had anything bad to say about Schwab Bank or anything like that, it's like, oh, well, now you're a part of it. Are you going to transfer your assets out? And if you do, where are you going to go? So now when you start to combine these entities and you make it so that, hey, look, we're setting these rules and you have to play by these rules. If they say, look, you have to open up an account now that has $5,000 in it, what person has the 5,000 to put in just to be able to trade stocks, just to be able to trade options, mutual funds, whatever it is they want to trade? Those are the things that people have to think about. Also, the ability to just click a few buttons like, oh, I've traded margin accounts for more than 10 years. I've traded options for 7 years. I've traded stocks for 15, and you click a button and you sit back and you hope and wait like, okay, I'm pretty sure they're going to allow my account to go through because I put in all this experience. And they're like, oh, yeah, now you have this margin trade line. But those are things that should be earned in this marketplace. And that's my opinion. Because as an investor, you should want to put your money somewhere where you know it's safe. But that's where we're heading. We're heading towards this place where you're going to get this illusion of freedom. You're going to get this illusion of more. You're going to get this illusion of, you know what, cool. I'm just going to, in some ways, accept this because it's just what it is and I have no other options. It's not going to be that way just with investing. This is changing the topic now, but it's still along the same lines of 2024. That consolidation aspect that I was speaking of, you see all these companies going to Congress and they're talking about monopolies in particular markets and stuff, but there are certain industries out there that are going to be allowed to monopolize and create these systems where, yes, you can psychologically trick, dupe the consumer because you still have to meet profit margins, shareholder expectations. You still have to make your numbers look good. So companies like um, Disney, Netflix, any company that will, actually, if you've been on Walmart's website recently, I'll put it like this: a company who, how can Walmart have a subscription service? But anything to make the consumer pay out money that seems like it just comes out and the amount is so small, the amount is so little that the consumer just doesn't care about it. I was studying consumer spending habits earlier and really realized that if you set the number low enough, if you set the number at a level where people look at it and they're like, oh, whatever, that's fine. That's something I can substitute in a day or in a week that I'm just paying over the course of a month. Okay, cool, fine. So companies will use that to their advantage. Companies know that. There have been studies about that done, and they're not studies that get released to people. These are like Nielsen studies. Um, if you okay, let's say you're watching CNBC or Fox News and you see them put up the poll or put up a study and they put some numbers up. If you look at the very, very bottom, whatever fine print that is, it's going to tell you where that came from. Go to that place and just look at what they have. And you'll really see, like, oh, okay, they're really looking at everything. They look at habits, they look at patterns, they look at what industry, they look at store types, knowing that that's how Walmart knew they were getting edged out in the market by Amazon on the online side. And now Amazon is trying to and has in some way gained momentum over Walmart when it comes to the I'm still here, I'm just looking for my cord. When it comes to the brick and mortar side. All right, sorry. So with that being said, 2024 is going to be that year where you're going to have to be super, super disciplined with your spending. So whenever you want to go to the store, whenever you want to buy something, you have to really, really ask yourself if it's going to fit your goals. If it's going to fit your goals for 2024. Because the financial markets are under assault and you will be too. So to give you guys something to look at, we're going to talk through it a little bit. Let me pull up the Forex Factory calendar really quick. All right, so you guys should be able to see this now. Going into next year, so people are talking about how job numbers aren't important, how some of these economic indicators don't really mean anything. And I get this for technical traders, but I want to say this as far as just sticking along the theme of mindset and 2024. When these items, in particular, like non-farm, this is the ADP non-farm change. So this is the one that comes before the government issued number. When we start looking at these job numbers, these are going to be super important just to understand the mentality of the Fed. So the Fed doesn't always solely take job numbers into consideration, but there have been a lot of groups that have been petitioning the Fed to say, hey, look, we need for you to look out for us. We need for you to not do certain things with jobs because, you know, these unions, they really feel and now know their value and they want the Fed to see it too. However, there's another side to that where the Fed is like, well, in order to slow demand, we gotta shake up the job market. Now we know the Fed says, okay, yeah, we're going to cut rates. It doesn't matter if the Fed cuts rates to zero. If the Fed cuts rates one time, actually, let me go back. It does matter if the Fed cuts rates to zero. Because if they do it too fast, we're going to end up in a situation like late 70s, early 80s. We're just going to end up in a bad situation where you end up in a deflationary zone because you don't want to steer too far away from your normal range of economic bounds. You don't want to be too hot and you don't want to be too cold. The prospect of going to zero sounds amazing. And it could be great for the stock market. It could be great for cryptos and investing. However, I feel like at this point in time, it's a mind game. Um, Having Jerome Powell say something during the speech, having even Jamie Dimon say something, it kind of throws off the investor. But these numbers, they matter. They always matter. It's just how they matter in context. So, um, it kind of goes back to my point before when I was talking about actually understanding and knowing what these things mean. So, from now to the end of the year, the big goal is to understand news items, understand where they come from, understand what they mean, understand why that information is important. Then know, make a mental note, write it in your trade journal, put it on a post-it note, and just know and or list out all of those things that are happening between January and June of next year that could affect what you trade. Um, for most investors, for most people who trade anything, the shift in clearinghouse policy and the shift in how clearinghouses do business is one. The shift in how the World Bank is treating central banks is going to be very important. If you are into crypto, digital currencies, all of the Bitcoin news that's happening will be very important. And if you trade digital currencies, know the ones that have some major impact or some major event happening during that period of time. XRP, Solana, those are ones, Stellar Lumens to an extent, like just in general, like those are ones that have like if you think about the names that have been mentioned, the names that have been mentioned as ones that will carry some type of global effect, not from some YouTube guru or someone who thinks they know cryptocurrencies, but actually from policymakers and officials, naming ones that they care about. Just pay attention to those, follow those, and then also making sure again that you have money on the side. I feel like for any investor going psychologically, like from a neuroscience perspective, if you have money available, or if you know for a fact, like, okay, I have this portion of my portfolio allocated towards this. However, should market conditions change, I'm going to shift over to the next thing. If you know that and you kind of have that idea in your mind, then it makes it a lot easier than scrambling at the last minute and then possibly selling something you never had any intentions of selling or getting rid of because of FOMO. Also, tell yourself and know what you're going to do in a certain situation. if you find that market conditions are going to be good for crypto, make sure that you already know. I think a lot of what I'm trying to say here is just plan for those things that are going to be happening, because the first half of next year is going to go pretty fast as far as news is concerned. It's a lot. It's just a lot of things happening back to back, and it's going to seem like, man, this just happened, now this is happening, now this is happening. Um Laws and rules around businesses, business structure, those things are also changing at the beginning of the year, changing the topic slightly because I'm just now focusing on 2024. But if you have a business, thought about starting a business, please check to see what the laws are um, on a state level for having a business, and see what rules are going to be changing. Corporate tax rate, if you live in North Carolina, for instance, corporate tax rates are changing, how you structure your business and how you file and what you do, filing fees, all those things are changing. So just make sure that you know so that you don't get blindsided and either lose your business, get charged a lot of fees, um, or anything along those lines. Um, yes, I'll leave that at that because 2024, 2025 um are transitional periods. And trying to see if I still had the book out about cycles. If you haven't read cycles, or if you didn't get cycles, um I'll see if I can either find my e-copy and share, or show you guys just some cycles so that you guys are aware. We talked about real estate, we talked about rates, we talked about the retail side of things on the last call. So I just don't want to keep repeating those things, but all of those things are super important. So only thing now, I just scroll down on the Forex Factory calendar just to kind of wrap up this session, because it's been a little bit of this, that, and everything in between. But this news that comes out on Friday is going to be highly manipulative. So these are news items that the media tends to feed on. They're news items that, yes, before we talked about how important they are. We talk about how high impacting they are, and they are. They are important in context. They are high impacting compared to other news. But at the same time, if you don't know that ahead of time, these are especially the 10 o'clock items, not so much the 8:30 items, because I think people hear this kind of um, on a day-to-day basis anyway, that people just don't really, it doesn't phase them anymore. But if you hear that the consumer sentiment is XYZ, you think, oh man, consumer, that's me. Now you're starting to think about your patterns, how other people feel with their spending, and do you feel the same? Inflation expectations, we've kind of heard that already. So you already should know, regardless of what the news is, wait. Um, don't try to trade ahead of the news. But wait and see how the market feels about the news. And I think that's the biggest thing. If you can just wait and not feel like you missed a move with these news items, and you can just sit there and just watch the screen, or don't watch the screen. Go do something else. Sleep late. Wake up later. Then look at it and say, oh, this is how the market responded to this news, because you also want to know what the sentiment is of the market. You can go look at a fear and greed gauge if you want to. That's not real time telling you what the markets feel. If you look at when news drops, what the market does, that's your real time gauge of fear, greed, how the market feels, happy, sad, like fearful, super fearful, or oh yeah, the market's been waiting for this news to just pop and go crazy. So I want to stop sharing my screen for a second. And I need to make sure that I covered some of my very broad topics. This is the last thing, going back to pharmaceuticals really quick from last call. Pharmaceuticals, tech, the retail space, expect a lot of changes from those. And I'm not even like talking from a place of maybe, kind of, sort of, but when you understand that in these type of market conditions, companies like to buy each other or merge so that they help each other out. That's helpful. And then also restructuring their brand. I brought up Walmart and they have a subscription service. Whoever would have thought that Walmart needed a subscription service to help support their business, but Walmart needs a new stream of income. Walmart needs a new stream of income. That says a lot about what other businesses are going to need, because Walmart is the largest big box retailer in the US. So think about those things, know those things, and then you can like have a mental kind of like a note in the back of your mind that if mergers happen, it should not be a surprise. And when they do happen, figure out if you want to invest that way, what is the best way to position yourself for mergers and acquisitions and that sort of thing. But that's all. I'm done.
So sick, as always, as always. And yes. Thank you for all of that, Carmen. Very, very, very valuable information, very powerful information. And I hope you guys were taking notes. So yeah, speaking of digital currencies, what is taking the Pi Network so long to go to mainnet, Carmen? What they waiting on? Can they come on with the money?
Probably a policy thing. You know, a lot of these companies, I feel like I watch how they do when companies are very excited about what they have and they're confident in how the market's going to respond and how policymakers are going to respond, they automatically do it. It's like no, it's a no-brainer. But if there's some apprehension from some area, they don't do it. They wait. But I don't know. I mean, as far as like PiCoin is concerned, like the specific reason, I have no clue. It's been a while. I will say, to me, I feel like, okay, strictly opinion. My opinion is that PiCoin is going to operate like Electroneum. Electroneum came, it was like, hey, mine this coin. You can make money. And it's like you go into an app and you push a button. It's like, okay, come back later, like, oh, got 50 of those. Okay. Come back a week later. Oh, I got 5,000. Okay, cool. And then it's like, well, dang, what do I do with this? I think PiCoin is going to be that coin that's like a sleeper coin, kind of like Electroneum, that kind of comes, it just kind of slides to it just kind of slides onto a platform, main nets, and then it's just like, okay, it just sits there. It's not going to be a lot of hype. If there is a lot of hype, okay, cool, but I don't think so. I mean, I could be wrong, but I feel like a lot of hype brings a lot of attention. So they just kind of slide onto the scene and you can use it for like a lot of things. Electroneum, you can use it to pay your phone bill, electricity, like the number of times I've used the electronium that I've earned, it's like, dang, it's a lot of money. Okay, cool. And I spent nothing on it. I just went into an app and clicked the button. So it's going to be, in my opinion, one of those coins because initially it can't have a ton of value because people just went in and clicked the button to get it.
Absolutely. Yeah, absolutely. I
So
totally agree.
I think it's going to have a transferable use where they partner up with five big brands and say, look, will you accept this as payment on your platform until we can recoup or until we can get the number? So I think it's going to be strictly opinion. I think it's going to be a cash for coin deal where Picoin says, look, um, we have this many coins outstanding. We need to get the outstanding coin number down to this number. Will you accept X amount of dollars for this many coins on your platform within your brand? And then once you get them, you just hold them and somehow they just like absorb all of these outstanding coins until there aren't really that many just like floating around amongst retail users. Now, these five brands will kind of like buy into Picoin via that method, but amongst retail traders, there won't be that many coins just floating around. So then the value can move a little bit more. But when you have um, a lot of coins just floating around, and at this point, I don't know how many it is or how many were allotted in the white paper because it's been a minute. Um, I think that's another reason behind possibly behind the delay in main netting. But those are just opinions.
Absolutely, absolutely. We shall see. We shall see. I don't want a lot of hype behind it. I would like for them to just slide on in mainnet without it being a lot of hype. The price spike up. Let me take out my profits and get on about my business. I'm already mining like half of my pot anyway. I can't even touch half of my pie until like 2026. So I got like 8,000 pie. Not mining, sorry. I got half of it,
Thank
50% of it state. Yeah, got it locked up until 2026. So I can only touch 4,000 of it. So, and I think that's the route that a lot of Pi members are taking. I think they're state. I think that the Pi community really has the HODL mindset, and I think that it's more of a commerce based token than anything because right now they're doing the local commerce testing. So you can use Pi with other pioneers to buy their products and goods, services, or whatnot. So yeah, I agree with you. I agree with you on that. And while we're on the topic of cryptocurrency, I just want to, because Carmen was talking about, being aware of cryptocurrency in the events that they have coming up. So of course we know that we have Bitcoin halving coming up next year, right? It comes around every 4 years. And you guys have been with us, most of you on this call have been with us long enough to have experienced one of those halvings, at least one of them, right? Because the last one was in 2020. So I think a few of you guys was with us. If not, you was following us on Facebook and seeing the things that I was posting and talking about in 2020, right? And so I just want to take you through um the halvings and just looking at the historical data of what occurred when these halvings occurred, when they happened, right? So the first Bitcoin halving was in November 28th of 2012, right? It's not even on here. And then the hold on, let me see if I can find another Bitcoin chart. No, this one don't even go back there for neither. So, all right, cool beans. We'll just stick with this one. Right. The second halving was July the 9th, 2016. Right. July. Right here. Right. July 9th. Right. So this was the week of the second Bitcoin halving in July of 2016. You see, we had the halving and then price went up. So the price of Bitcoin at the first Bitcoin halving on November the 28th, 2012 was $12.30, right? That was the price of Bitcoin at the first halving. The price of Bitcoin at the second halving, July the 9th, 2016, was let me go back and find it. This week right here, right? This was the second halving. The price of Bitcoin at the second halving was $680, guys. So the price of Bitcoin at the first halving was only $12.30 on November the 28th, 2012. The price of Bitcoin at the second halving, July 9th, 2016, was $680. Let's move forward. The price of Bitcoin at the third halving, which was May the 11th, 2020, right here, this week, right here. On this week, I'm sorry, that's March, May the 11th, right here. Okay, right? So on this day in 2020, it's documented on my Facebook. I shared it last week, or the beginning of this week. This week, right here, right? I was aware of the halving coming up, and I figured that we would see Bitcoin spike to the downside before then moving up in price because we have the halving coming, right? In the previous 2 years, Bitcoin did what at each halving? It went up in price. So on this week right here on March the 12th, no, March the 9th, this week right here, I sent out a post on Facebook telling people that Bitcoin halving is coming. Bitcoin halving is coming. I think price is about to go bullish to the upside. And we may never see these prices again. That's almost verbatim, right? So I put buy, buy, buy. Um, 3 days later, on March the 12th, price fell down to $4,000 for Bitcoin. 3 days later, right? So we see the halving on May the 11th, right? And Bitcoin was at $8,590 at the third Bitcoin halving in 2020. Price was at $8,590, right? So for the first halving, price was at $12.30. For the second halving, price was at $680. For the third halving, price had jumped all the way from $680 to $8,590, guys. Right? So if and not only did it jump from $600 to $8,590 at the third Bitcoin halving, after the third Bitcoin halving, we all know what Bitcoin did. Bitcoin shot up to first 64,000, gave us a pullback, and then shot up to 68,000. Almost, let's see what this high is. $68,958. Might as well round that off to 70K. Right? Now, if Bitcoin jumped from $12.30 from its first halving to $680 to its second halving, from $680 to $8,500 at its third halving. What is what is historical data showing us? Historical data is saying that more than likely at this fourth halving, we're going to see Bitcoin expand and increase extremely to the upside, right? Because that's what the historical data shows us. So the fourth Bitcoin halving is coming up in April of 2024, right? So let's look back at the 2020 halving, right? May the 11th, right? Price started going up, and then we had this pullback right here, and then it just ran away. So we can see from December of 2019, price was going up, and then we had a drop. Excuse me. Then we had a drop right before going into halving, and then price ran away from us. I'm thinking that's what we're seeing now. We're seeing price move up, right? We're in December, same month, right? Price is going up. I think we're going to see a drop back down on top of this market structure right here that we was waiting on price to get above to get us up to 40,000, right? I think we're going to see price push back down to that structure from where we're at, right? Inside of this weekly fair value gap that we're inside now. I think that we push back down to 32,000, and then that'll be your last opportunity if we drop that low to get into Bitcoin before the halving at the best price, in my opinion, right? And I think that once we have this pullback, we find support and we start getting closer to the halving date. We won't see these prices again for a while. We probably definitely see them again, but it won't be until after we run all-time highs of 68,900. So since we was on the topic of, since Corman was talking digital currencies and crypto or whatnot, I just wanted to give you guys that history lesson and show you why next year is going to definitely be a big year for Bitcoin and cryptocurrencies. So, and do you have anything to add to that before I wrap up the call, Corman?
Um, as far as Bitcoin is concerned, or just anything in general?
Just Bitcoin.
Um, no, not really. The biggest thing is just being aware of how Bitcoin moves. And if Bitcoin is something you're not in and you want to trade it, Bitcoin is very rhythmic. I'll put it that way in how it trades. I traded Bitcoin solely for a really long time until a certain trading platform did me wrong, and I'll never forget that day. Anyway, so Bitcoin is very rhythmic, I would say. If so for ownership, um obviously wait for your ideal level, whatever that may be according to your trading plan, and get in. But if you want to trade it the forex way, or on an exchange, just you really have to go back. You really have to just go back as far as your chart will let you and play it out. And it might take you some time, but I promise you it is so worth it to just go back and find out the patterns, find out, why Bitcoin moved the way that it did. Because when you start if you go to TradingView, I'm just tell you, go to TradingView, start at the very beginning, layer on interest rates, layer on news items, not just any news items, selectively choose US news items because in the grand scheme of things, the other country news items don't matter so much for Bitcoin. Even if it was something that said something about regulations, just US only. US news, US interest rates. Layer those on. Go through every last one of them. It is going to be tedious, but put a vertical line on all of them. And then go back. So do interest rates first, then go back to the beginning. Put a different color on and put a vertical line on news items. Then go back to the beginning. Mark the date for halving. Then go back to the beginning. Mark the highs in between news items. So find the interest rate change, find the high that happened right before it, after it. Find the low that happened right before it, right after it. Major news items. So major news items that would pop up here would be like Fed speeches. You can single it out too to just be crypto news. So just news about Bitcoin, but NFP is going to be important. Sentiment will be important. You might not think that those mattered, but they drove the news, they drove rate news. So you should see a correlation between those. But mark that, mark the highs. So every time, so you guys know my Bitcoin chart looks crazy and chaotic, but when you start to do it, you will see the patterns because if you mark the high, mark the next low, and measure the low, and then keep going, mark the high, the next highest high that it made, and then mark the drop after that and measure it. Keep going. And when I measured the highs, I measured the top of wicks, but then I also went back and just measured the actual volume. So which would be like the area where it closed or open. So obviously, you know, if it was a negative bar, it would be the very top where it opened. If it was a bullish day, it will be where it closed. Whatever the top of the bar is, measure that because you will definitely see patterns in how Bitcoin rose and how it fell and how many days it took to get there and how many days on average it stayed near that high before it fell and potentially went back to another high. I promise you, when you look at this chart, you don't see it. But if you actually put bars on and you measured, it's within a very, very tight range of days. Bitcoin is very, very, very predictable. Even though it doesn't look like a lot happened from June of like 22 up until now, there's a lot in there. If you put bars, put your levels on there and just measure it out, it's going to be tedious, but do it. So you have to start out on the monthly because you just want the gross bars. But then eventually it's going to get to the point where you have to go down to the daily chart. Don't go down any further than a daily chart. It's going to be like pointless. Stay on the daily as your lowest time frame because your daily time frame is where you're actually going to measure the distance. So you'll be able to see on average Bitcoin some for 63 days. And it's like, oh, okay, that's nice. I want you to find out what that is. I said it on a Zoom call a really long time ago. I don't remember which one. But yeah, Bitcoin has a thing that it does for 44 days, 63 days, 77 and a half days, and 92 days. So you can go through and like figure out what those things are, and then you'll be able to quote unquote read Bitcoin like a book, I guess you could say. I'm done.
Cool beans, cool beans, cool beans. Well, ladies and gentlemen, that will conclude the midweek technical and fundamental analysis. As always, if these reviews are helping you, giving you any value, adding any value to your trading career, please feel free to like, share, and most of all, subscribe to the YouTube channel. It really helps out a lot. If you would like to join the private Telegram group, visit the website at precisionpipsllc.com. Sign up for the silver package. The mobile site is fully operational. The desktop site is still under maintenance. So if you visit the website from your desktop and laptop, we're having an issue where the screen is just blink. So we're getting that fixed, but the mobile app is fully operational. So just visit it from the mobile app if you can. So with that being said, I appreciate you guys coming out, tuning in tonight, getting this knowledge and empowering yourselves. Let your family and friends know you love them while they still here, please. And as always, peace and love, everybody. You know.
Peace and love.